Good afternoon, everyone. Welcome to the 8th day of NAVARATNA Conference Season 3, organized by 9 branches in the state of Kerala. Today's session is hosted by Thiruvannthapuram branch of SIRC of ICAI and myself, Cheriyanji Samuel, Chairman of Thiruvannthapuram branch, along with the committee members, CA Ramakrishnan H, Vice Chairman, CA Nikhil R. Kumar, Secretary, CA Srividya C, Treasurer, CA Julie G. Varghese, Sikasa Chairperson, and CA Rama Sharma, our committee member. We welcome you all to this webinar. Let us start this session with this motto song.
Yaesha supteshu jagrati Yaesha supteshu jagrati Kamam 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 Purusho nirmimanaha Tadeva shukram Tadeva brahma Tadeva amritamuchyate Tasmin lokaha shataha Sarve tadunatyadi kaschan Etadvaita
The inaugural session is scheduled at 4 p.m. as our chief guest will be joining by that time only. So we are now moving directly to the session. Today's session will be handled by CA Venkatesan, who is an expert in corporate and international taxation. He will be deliberating on the topic taxation of digital assets. On behalf of the branches in Kerala, we extend a warm welcome to you, sir. We invite our committee member, CA Rama Sharma, to introduce CA Venkatesan.
Thank you, Chairman. CA Venkatesan R has 25 years of experience in consulting in the tax and regulatory practice. He leads the corporate international tax practice in South India. His specialization areas are consumer and industrial markets, technology and real estate, financial services, media, and healthcare sector. He is a postgraduate from Madras University, fellow member of the Institute of Chartered Accountants of India and Institute of Cost and Works Accountant of India. He has been involved with advising large overseas corporations for various advisory services. He has also represented various multinationals before the tax authorities on corporate tax and transfer pricing assignments. He is actively involved with various trade and commercial bodies. Apart from having authored several articles in various tax journals such as IFA, ICAI, he has been featured in regional media, print as well as television for his professional insights and thoughts on tax and regulatory developments. Over to you, sir.
Thank you. Thank you for the fine introduction. Should I start?
Yes, sir.
Okay, thank you. So I have my colleague to help me with the presentations, Simon Bobbin. So he'll be flashing the screen. So today we are looking at let me switch out the video because of network. Yeah. So today we look at the new age taxation, which is the digital assets. So primarily, if you see, we have been traditionally taxed on business income, capital gains, and these digital assets were not to be seen. They are intangible. We don't know where they reside. And finally, in the last budget, we saw the FM present the virtual digital asset taxation, wherein a digital asset concept was for the first time formally recognized by the Indian government also, while many other countries globally are recognizing it in some form or the other. India started recognizing it, and we will talk at length of the digital asset. So before we get into what India does on digital asset, let's have a brief overview of what is this digital asset animal, because many people, including me before the session, I was not fully aware of what this digital asset is. And along with you, I started learning. And now I can fairly say that it's a completely different ball game, a new age asset, which is virtual, that is getting created, traded, and money is made around it. And of course, many countries are taxing it, and India also has proposed to tax it from this financial year onwards. If you see historically, what has been the digital asset? A digital asset is generally anything that is created or stored digitally. It is identifiable and discoverable and provides value. The digital asset have become very popular because of the technological advances over a period of time. If you see in the past, a digital asset was in the form of data, images, video, or written content. All of them were having a long-standing value and ownership rights. For example, a company's brand can have could have a digital image of that, and then that was an intangible which was recognized in the books in the past. We can say brand is an intangible. How how it could be in the digital form, but in the past it was more in the digital form. Some digital items might only be valuable to the creator, maybe to one person, such as a family picture on your phone is valuable to that family and not beyond that. But others could be valuable to a wider audience also. Like for example, if you collaborate in art or a sculpture that's been created in the past, it could have been valuable to many people. So in the past, the digital assets such as data or scanned documents were owned and used by organizations to realize value. However, in the blockchain, which is the new age technology, and the cryptocurrencies were introduced, digital assets got completely redefined. Anything in digital form became something that could be used to create value via tokenization on a blockchain. So if you'll see internationally, there has been no standards on digital assets. Even the FATF, which is Financial Action Task Force, which is a global money laundering watchdog, defines virtual asset as a digital representation of value that can be digitally traded or transferred and can be used for payment or investment purposes. So far, like you have now shares, which is digitally the shares of companies are now in digital form and is being traded on exchanges. Similarly, similar recognition is on the way. Some countries have created exchanges. Some countries have recognized them. Some countries have not recognized such exchanges of trading in digital assets. Primarily, these digital assets are like cryptocurrencies, NFTs, or other tokens which are fast emerging. For example, the blockchains are the technology solution that enable the digital assets. The blockchain is a method of securely recording information on a peer-to-peer network. It's a shared public database duplicated across computer systems in which new entries can be added, but existing entries cannot be altered. For example, one person creates a particular blockchain, others can add on top of that and create a much better value of the blockchain, but they cannot erase the existing one. So once the other person adds, the blockchain becomes bigger and tokenizations are getting created for that. A digital asset is created or minted when new information is added to a particular blockchain. Through blockchain entries, users can exchange existing digital assets and or create new ones. In the form, so this is authenticated by use of private keys, wallets, etc. Can we move to next slide? What are the types of digital assets? So there are cryptocurrencies, there are stable coins, there are security tokens, NFTs, non-fungible tokens. central bank digital currencies. This is what our finance minister also said. We will create our own digital asset, which will be traded formally in a formal exchange, which is they're ready to create. But they mentioned central bank digital currencies. So what are, let's briefly look at each of these items just to understand, while all of them are happening digitally, but there are certain, okay. My video is on. Yeah. Okay, fine. So the crypto assets are nothing but any digital store of value or medium of exchange that's stored on a blockchain. It can be used for investments, payments, creating a fund for a project. So these are created on the blockchain by adding blocks to it, and each block creates a currency around it. Stable coins are also a kind of cryptocurrency designed for price stability. In the crypto assets which we saw earlier, the prices can fluctuate based on demand, supply, or creation of or mining of the coin. But in a stable coin, the price is very stable or linked to flat currencies, commodities, or other crypto assets. So this coin is created based on much stable assets. Again, this can be used for making payments for purchases, foreign exchanges, cross-border payments and transfers, etc. NFTs are slightly different. This is a token that represents ownership of a unique digital item. For example, an individual creates a particular digital asset, and in the form of a software or a unique software that he has developed, or a small patch that he has developed. And if somebody and we can create tokens for that. If somebody wants to use it, they can buy the tokens and then see what is the software, try to apply it, and the software is there to stay for the owner. But if the owner of this particular digital software decides to sell the entire thing, that goes out of the digital asset. That's an intangible asset. So these are tokens created by creating these digital platforms where tokens are getting created for such development of such digital platforms, which are then utilized for various transactions. And that's why in today's newspaper also you saw the Interpol has said that all these digital assets are being used to fund various activities which they are tracking and stuff like that. So the control and organization of all of this is still very fluid. Again, as I said, the central bank digital currencies are each country specific digital currencies, like India is planning one. Again, this can be used for like any other currency for making payments or for cross-border payments or transfers. It is akin to your hard cash currency. Security tokens are digital assets that meet the definition of a security or a financial investment. These are stock-based or a financial security-based tokens. Again, here, this is also based on technology platform. These tokenized versions of stocks or bonds are again traded in the market, and then there are transactions happening around them. It can be used for purchase of real estate, property, because these are all backed by financial instruments. Next slide, please. Again, the storage of these data, you see, they are stored in blockchain, inside the blockchain, and the wallet is given by the owner has got a wallet with a key where all of these coins and NFTs are stored. If he wants to use that particular coins or the tokens, the key needs to be entered like any password, and he can draw from there or deposit into that wallet. Only owners can access it. And the selling happens via digital platforms, sending a crypto. So we saw a news article last week in Bangalore. One tea shop was accepting crypto coins also. So he said you can transfer crypto coins for a glass of tea. So in India also it is famous. People are trading in cryptos and NFTs. and it's time that it is regulated and of course brought to tax also, which we will see as we go along. Next slide, please. And these are used, as I said in the earlier slides, these are used for exchanges. Exchanges in the sense you can exchange one digital asset for another digital asset, or exchange for goods. You can give cryptocurrency and exchange for goods or services, or you can give cryptocurrency and exchange NFTs. You can use it for gaming platforms as a token. You can give a token for using a gaming platform, or in any marketplace, buying any goods or services. These assets are being used to exchange as equal to money. And there are certain decentralized apps. To access those apps, the consideration is to tender some of these digital tokens. And decentralized finance also, where it's not organized finance, again, moving funds from one place to another place using cryptos is happening. Whether they are organized, unorganized, controlled, uncontrolled, it's all country specific. Next slide, please. So if you just to summarize what we spoke so far on the digital assets, you will see in the bottom, the digital assets are created like crypto, stable coins, CBDC, NFT, security tokens. These are, once they are created from the blockchain, they are stored in wallets using a key or a password by the owner. And the owner can use these assets to purchase in the marketplace or exchange with anything, goods or any other assets, playing games in the app portfolios. So this is how this whole thing works. Next slide, please. So I'll just pause here before going to the global trends. If anybody wants to make some comment or anything. Yeah, I'll move on then. I'll wait for another opportunity. If you see the global trend on how these digital assets are treated by different countries, European Union, it recognizes Bitcoins and other cryptocurrencies as crypto assets. And England, Bitcoins is legal in UK. USA, still no clarity, but some regulations, rules will come in the short run. Australia considers cryptos as a financial asset, taxes any buy-sell transactions under capital gains. So similar to India, Australia is also taxing that. China, blanket ban on mining and trading of private cryptos. So far, they have not opened up. Canada, trading is legal, not legal tender. So you cannot tender, you can do trading, but it is not a legal tender. I don't know how they want to define that. Africa, crypto accepted as currency in Central African Republic only. Only in particular region it is accepted. In other places it is not accepted. Move on, please. If you look at the India scenario, it's crypto is a decade-old story. It's there in existence since 2009. The world's first decentralized cryptocurrency was created by a Japanese person, Satoshi Nakamoto, in 2009. And from there, the journey kept moving on the crypto side slowly. Between 12 and 16, Bitcoin and other cryptocurrencies gained traction in, and also there were presence in India in a very small form. RBI realized that this is growing and then restricted such digital transactions. But Supreme Court lifted that ban in 2020. Immediately when the Supreme Court lifted the ban in 21, you see there was a jump in the investment in cryptocurrencies or digital assets in India. It jumped from almost 1 million to 7 times 7 billion. Sorry, not 7 times, it's about 700 times in 2020. And in 2022 budget, they have brought in a law to tax the gains, not the losses, the gains alone. We'll see that in detail. So in India, as of today, in some form, they made it recognizable and also taxed. Yes, there is a comment that in Dubai, you can buy an apartment using cryptocurrency. Yeah, in different jurisdictions, you can use these cryptocurrencies to buy whatever you want. In India, we are still grappling with the law. They are still have to notify guidelines, rules around it, but they've got the tax part alone right already. We'll see that. Move on, please. To see the landscape in India, as I said, from 2009, the transaction was not very much. Not many people were involved. Suddenly, after the Supreme Court clarification that it is not banned, there was a spike. You will see the spike in 2021 and 22. And there are 15 million Indian investors in cryptocurrency already. Almost 10% of the population is already in cryptocurrency. And their holding, as I said already, has jumped to 7 billion now. And if you see the users when compared to the much developed cities like countries like US and UK, we are not very far away, at least in this. And surprisingly, women investors are increased by 1,400% in the last 1 year alone. This seems to interest women a lot. Next one. Yeah, so almost 40% are under the age of 30. If you see the age group topography, on the right side, there is a round. You will see more than 62% are below the age of 34 years. All the youngsters are somehow glued to this crypto. And you will see the between 35 and 44 is the next around 17-18%. And the rest is 45 to 65 is small percentage there. Almost 40% is under the age of 30. Between 30 and 34, we have another 20%. As I said, 115 million investors and 56% believe crypto is the future of finance and 52% invest in crypto to earn passive income. Crypto catches the attention of boomers. Crypto has been accepted by large institutions and companies today. And we saw the finance minister talk about calibrated approach. Yeah, so there's a lot of traction on the crypto from the Indian side as well, primarily the youngsters and women. We saw there's a spike in these two categories of people. Next slide, please. So moving on to the taxation of digital assets. So we will talk about the global taxation first, and then the Indian taxation. So UK, US, Singapore, Australia, Canada, New Zealand, all of these guys have released guidelines on taxation. The OECD also issued a report how the VDA needs to be treated and around the 50 countries on various aspects of taxation. The OECD is also actively looking at this, and including the NFTs, and the Australian tax authorities have also stated that it should be similar to other cryptocurrencies. So primarily the taxation around cryptos is increasing across the globe, and more so with most of the developed countries, it is already in place. Next slide, please. If you see the tax rates, some countries tax it as capital gains, some countries tax it as normal income, like India. So the yellow ones are capital gains. The maximum is in Australia at 45, UK 45, US is 37%, Brazil is 22%, France is 45%, Switzerland is 35%, India at 30%, Korea is the least at 22%. So these the pound of flesh of these gains are taken by the government in most of these countries. Next slide, please. We have got a rule which is effective from FY 22-23, but technically taxable from July 22. Tax mechanism is there only from July 22. We will see each of these boxes one by one. Yeah, so in India, if you see the section 247A, which is the definition section of the Income Tax Act, defines what is virtual digital asset. So it says any information, code, number, token generated through cryptographic means or otherwise is taxable under VDA, providing a digital representation of the value exchanged, having inherent value or functions as a store of value or a unit of account and capable of being transferred, stored, or traded electronically. Basically, what they say is it should have a token, code, number, cryptographic means. It should have digital presentation. It should have a value, and it should be transferable. If these meets all these four conditions, they are defined as virtual digital asset under the Indian income tax law. And this also includes NFTs and other similar tokens. And any other digital asset as may be notified by the central government. So if something new comes up tomorrow, that is also they will notify and add it to this. So four conditions. Please go back. Yeah, four conditions. It should have a code number, token. It should be digitally represented. It should have a value, and it should be transferable. These are the four pillars under which they are trying to tax the digital assets. Next slide, please. Okay, what is excluded? Indian foreign currency under FEMA. So we have physical currency, Indian currency, foreign currency. All of that is not part of VDA. Reward points. So whenever you buy in a credit card, you get reward points, or you buy something, reward points are given to you. Of course, those reward points are taxable separately, but not as VDA. Loyalty card. Again, if some outlets give you loyalty card where if you're a loyalty member, you get some discounts. So that is, or they give points to the card and then you can use it later. So those cards are also not VDF because they're all tangible. Mileage points. We used to have these mileage points in the airlines where mileage points are given and then you exchange it towards your air tickets or your travel. So those mileage points are also tangible and not VDA. Of course, these are taxable anyways because these are benefits that you are receiving. These can be taxed under other provisions of the law, but not under VDA. Gift card or vouchers, again, tangible and it's not a virtual. Subscription to websites or platforms or applications, they are also not covered. Excludes NFT transfer, which results in transfer of underlying tangible asset. So this is what I said earlier also. In NFT, there are tokens created where these tokens are traded, but those tokens are generated out of an underlying software. So if these underlying tangible asset is transferred, that is not coming out within the VDA. That will go under the normal provisions of the capital gains or business income and taxed accordingly. But if these tokens are traded, then those tokens alone come under VDA. So these are the exclusion clauses specifically provided. Of course, there's leeway to add more and delete in this in the future. Next slide, please. Okay, so based on the definition of VDA under the Income Tax Act, we saw those four conditions. Out of this, if you see, there are primary conditions which are in alternative conditions to be satisfied to meet. For example, cryptocurrencies, it is an information or code or number or token, which is as per the definition of the Income Tax Act. Not being an Indian or foreign currency, no. Generated through cryptographic means, yes. So once it meets all the three conditions, then it has to meet one of the alternative conditions to be eligible for VDA. It has to have digital representation of value exchanged, yes. Functions as a store of value, yes. Functions as a unit of account, yes. So in this case, it meets all the alternative conditions. So cryptocurrencies will be a VDA. Coming to virtual gaming coins, again here, it is similar to cryptocurrencies, it meets all the conditions. But however, if you come to the prepaid payment instruments like mobile or internet wallets where you pay to GPay or PayPal, etc., it's an information of, it's a token that they create. It is not in it is an Indian or foreign currency generated through cryptographic means, but it is not a digital representation of value. It is a tangible representation of value. It functions as a store of value. No, it is a tangible. Again, here it's a tangible value here. It is not a unit of account. It is the balance that is lying in those accounts. So the PayPal or other or online platform where cash is physically transferred to hold like a bank account, they will not fall within the VDA. This is only a representation to again define the definition of the VDA under the Income Tax Act. And all are capable of being transferred and stored and traded electronically. Yeah. Next one, please. Yeah. Taxability of VDA. Next slide, please. Yeah. So section 115 BBH, a special section has been introduced. It's a code in itself to tax the VDA under the Indian Income Tax Act. There's a flat tax rate of 30%, of course, with surcharge and cess. The cost of acquisition, suppose you acquired this digital asset from somebody else by paying cash or any other digital asset, such cost is reduced from the sale consideration. How it is taxed? The gain is taxed. What is the gain? Your cost of acquiring minus the transaction value of the sale. I'll come to the valuation. Transaction value of the sale is the gain on that 30%. To arrive at that gain, what all is eligible to be reduced? Only the cost of acquisition is eligible to be reduced. Development cost. If you are the originator of that token or the cryptocurrency, your development cost is not eligible. I don't know what logic is this. So in a product, the developing the product cost is a cost incurred by me to develop a product, and then I sell it. The profit is taxed. But here they specifically said development or the mining cost or the infrastructure cost for developing such VDA is not eligible to be deducted from the sale consideration. However, if it is a second transaction after mining, you bought it from somebody for a particular value, you are selling it for a further value plus, then the difference gain alone is taxed. So in that case, they give you deduction for cost of acquisition. This is one big that you need to note. The second one, no set off of carry forward of losses. Only gains are taxed. If you have loss, you cannot offset against a gain. Whether it is in the same VDA or different VDA, we'll see. I've got a small example next slide. We'll see that. But the principle is no set off of carry forward of losses or the current year losses on a VDA. So each VDA transaction is taxed separately. Each unit of VDA when it's sold, if you make a gain, you pay tax. If you make a loss, you don't set off against that gain. Either the current gain or future gain or past gains. Sorry, either the current loss or past losses. Non-resident taxability. Suppose if you VDA which is located in a exchange in India, then depending upon his residential status and the treaty, the country in which he is coming from, and the provisions of the treaty, if it provides for taxing cryptocurrency, we need to decide what is the taxability of such person. Of course, there will be tedious provisions which we'll discuss in detail as we go along. But the non-resident and most of the treaties don't provide for digital assets as yet. So automatically it will fall within the residual clause of the treaty. It goes to the residual clause of the treaty. The taxing rights are with the home country, which is India. Loss set off. So I saw a mail. Loss set off between cryptos. As of today, it is not allowed. Within the same crypto, whether you can adjust the loss. Suppose your Bitcoin, your one unit you're selling at a gain, another unit selling at a loss, you can adjust it. No clarity. This is what it is. We'll come to this. Go back to the previous slide, not completed. Okay, with respect to non-resident, I was talking that we have to look at the treaty, and none of the treaty as today provides for taxing digital assets in a very broad manner. So generally, it will fall within the residual clause, and residual clause provides for taxing rights to the home country, which is India. Whether VDA is classified as a capital asset or not is irrelevant for taxation, because 115 BVH is a separate code in itself. It does not classify virtual digital asset as a capital asset or a revenue asset. It just says VDA, pay, if you make a gain, pay tax at 30%. And it is taxable from FY 22-23 onwards. Of course, the TDS provisions will apply from June 22 onwards. Next slide, please. Yeah, this was the loss. So for example, small example, suppose scenario 1 on a transaction 1, 100 Bitcoin is being sold with a gain of 100. And in transaction 2, Ethereum is a loss of 100. Set off is not possible. It's a clear no. In scenario 2, where you sell 100 Bitcoins with a gain and another 100 Bitcoins at a loss, whether I can set off this, broadly, it is not possible. But still there is an ambiguity within the same unit of asset. Can I set off? There's no clarity today. So, but the finance minister's speech, I clearly remember, she was very categorical to say any kind of loss in a VDA is not allowed, to either current loss or carry forward loss, and but you pay tax on all gains. So of course this area will evolve. We will have, as we move on, there will be more rationalization on this, more understanding of this subject, and then probably they will allow, because that's what is logically, if somebody will file a writ in the Supreme Court saying that it is on the same VDA, you are saying on one side you pay on the gains you pay tax, on the loss you don't pay tax. Where is the natural justice here? There'll be somebody who will file a writ, and then there'll be some light in that. But in future they have to allow this, but as of today it is not allowed. Next slide, please. Okay, transfer of VDA. Ambiguities again. So one is, there is no prescribed method of valuation. How do you value? So for shares, we have stock exchange. We have company balance sheet with which we can value. There are methods prescribed, net asset value method, market method, DCF method. So there is some background. There are also assumptions are there, but at least we have something to rely on to create a value for shares. But in a VDA, which is mined and minted, and then the owner creates that I have these coins, and then now you can trade. Depending upon demand, the prices go up. What is the basis of this valuation? There is no valuation guidelines provided as yet. So it will evolve. There will be disputes initial years, and at some point, the regulators will come up with a valuation methodology for this also. Cost for the subsequent transfer in case of gift. So suppose I receive gift of VDAs. What is my cost when I transfer it to subsequently? Because it income tax rates, cost to the previous owner will be the cost to me. But I don't know what's the cost to the previous owner. If he is a generator, in 115 dBH, they don't allow even the development cost. So while I get benefit of that here. Different trading prices at different exchanges. There are many exchanges who does trading of these virtual currencies. So different exchanges will quote different prices, and what basis they are quoting there, most of them also, it's not very clear whether we should follow FIFO method or LIFO method. So I have Bitcoins coming into me. First set of Bitcoins came in 6 months back. Second set came in 2 months later. The third set came in 3 months later. So what is the value I'll give? Whether I do an average value, some I paid by cash, some I got it by exchange of NFT, some I got by exchange of some other tokens. So there's a lot of ambiguity that's surrounding here. On top of it, 56.210 has been amended to say that any undervalue transactions, the difference will be taxable in the hands of the acquirer. Suppose the Bitcoins are traded at $100. I buy it at $90. 56.210 says that you got a benefit, the $10 also you pay me tax. But when my valuation itself is a question, on what basis 56.210 will be enacted or be activated by the tax office needs to be seen. But the provision is there. If the transaction, if there's a benefit accruing to a person on this transaction, you pay tax on that benefit. Next slide, please. So the biggest ambiguity is on the TDS part of it. Okay. So the basic provision, it says that, as usual, TDS is deducted whichever is earlier. Or payment, whichever is earlier. Like any other TDS provision, payment or credit, whichever is earlier. So section 194S has been introduced. For resident transactions are covered here. Non-resident 195. Again, treaty. The threshold is 1%. So, and 50,000 in the case of specified persons. Who are specified persons? Whose sales receipts are less than one or more than 1 crore in the preceding year in goods and services, or in profession more than 50 lakhs. All other persons are specified persons, where if you have transactions in VDA more than 50,000, the buyer, before he remits payment, will do a TDS of 1%. But here there's an anomaly in the last box. If you see, no need to deduct higher tax rate for non-filers, for non-filer sellers. So 206 AB provides that if you don't file your tax return, there's been amendment made that no need to deduct higher tax, which otherwise you have to do double of the tax. But there is one more section, 206 AA has not been amended. So if you don't have a PAN number, 206 AA says you deduct 20%. So here, if you comply, you need to pay 30% tax under 115 BBH. If you don't have a PAN number also, 206 AA says, let the buyer deduct 20%. You still save 10% arbitrage there. There's a gap. At some point, they will fill it up. But 206 AB has been amended to say that for non-filers, then higher tax need not be deducted. So still it will be 1%. Okay, next one. Okay, here peer-to-peer transfer. So there are different forms of transfer. One is a plain vanilla. I give VDA and I get cash. That is a plain vanilla stuff. But there are intermediaries in between. There are exchanges of different units happening. What will happen in those situations? In a peer-to-peer transfer, buyer is responsible for tax deduction and remittance. Quarterly reporting compliance, consideration to be taken, excluding GST portion as normal. So a normal transaction, when somebody is trading in VDA for cash consideration, the buyer, before he makes payment to him, will do the TDS, will do quarterly reporting, and will do the compliance. What happens if VDA is not owned by exchange? So typically there is an exchange in between the VDA owner, exchange, and then the buyer. So generally the VDA owner deposits the VDA with the exchange, and exchange will find a buyer to sell this VDA. Where the sale happens without a broker, payment made by the exchange directly to the seller. There's no broker in between. After the exchange, there will be a broker also. There's no broker in between, simple transaction. The exchange will do the TDS at 1% and will give it to the seller. Where both exchange and broker is involved, one of them have to do the TDS. Payment to the seller and payment is routed through the broker. Broker may undertake to deduct TDS via return agreement. So either the exchange or the broker should do the TDS, and only one level of TDS is enough, because the VDA travels from the owner to the exchange, to the broker, and to the buyer. So at what level the TDS needs to be done? If it has to be done, it will be done multiple layers. Here it says that if one of them, either the broker or the exchange, does the TDS, it is proper compliance. Next slide, please. So here there is a peer-to-peer, not through exchange, swap through exchange. So what a swap is, you don't pay cash, but instead the buyer will say, okay, you have got Bitcoins, I have NFTs. There will be a valuation that they will agree upon. You give me 20 Bitcoins, I'll give you 100 NFTs. So in this case, no cash is involved. The exchange, what it will do is, if 100 Bitcoins are given, it will hold back 1 Bitcoin and it will transfer 99 Bitcoins to the buyer. And in exchange, the buyer gives NFT. Again, that it will hold 1% of the NFT as NFT and give 99% of the NFT to the seller as consideration. And this 1 Bitcoin and 1% of NFT, the exchange has to either sell it in the open market and get money and pay the TDS, which is the TDS. There will be dual TDS, one TDS for the Bitcoin, one TDS for the NFT, because both are being exchanged. So the exchange is responsible either to pay cash as tax or sell these VDAs, one VDA of Bitcoin and NFT, and realize the money and pay the tax to the government. So that's basically what it says. Again, here valuation issues, the conversion issues into INR. There'll be a lot of leakages here, both on the valuation, conversion. Again, on when the exchange sells it to a third party, what is the valuation there? There may be difference in the 1% that it withheld. It may get more, it may get less. Who has to compensate all of to that extent? Whether the exchange will bear it or it will take it from the seller and the buyer. All of this clarity is not there today, but TDS provision is there. Okay, so clarifications on transfers and TDS, overriding effect. There is a 194Q. There's a TDS provision for sale of goods and services. If 194S is done, 194Q will not apply, is the clarification. TDS will be deducted net of GST and charges as in other TDS provisions. Payment gateway is not required to deduct a tax if tax deducted by the payer. Payment gateway need to obtain an undertaking from the payer that appropriate taxes have been deducted. And annual threshold, the 10,000 and 50,000 that we saw, that is for the annual transaction, but TDS is applicable only from 1st July. Suppose if from April to June, you have already completed 10,000 worth of value of transaction, from 1st July onwards, any transaction, you will be subject to TDS. So it's a benefit under disguise. Next slide, please. Case studies on transfer of PDS. I would request my colleagues, Bobin, to take you through this.
Hi, good evening, everyone. Case studies. So the first one is a plain vanilla straightforward situation. So what we are discussing is a scenario where there's a buyer and a seller, and the arrangement is the buyer is planning to buy VDA from the seller, and the consideration which is paid. There could be two forms like we discussed in the earlier slides. So the payment can be in cash. So first we will maybe discuss the situation wherein the payment is done by the buyer in cash, understand what are the implications, and then we will discuss the second scenario where the payment is done in kind. And so this is the background or the factual situation, and we'll be happy if someone if we also request if anyone in the audience can maybe give their inputs on what could be the potential implication, and maybe we can discuss and then take it forward. So anybody who wish to give your comments, happy to hear, or maybe if you can give the outline of what could be the implication.
Sorry, payment in cash, you mean payment by bank also?
Yes. So basically, even if it is through a bank, that would be in cash. We will treat it as cash.
Yeah.
In kind, what we mean is it could either be in form of any kind of an asset like gold, or it could be even another cryptocurrency, which could be a swap situation.
Barter trade. Okay.
Barter trade,
Yeah.
exactly. So maybe so there could be like we all know, the implication would be there for both the buyer as well as the seller. So if you go by the flow of event, the buyer would be identifying the seller, and the buyer would want to transfer the consideration to the seller to take the transaction forward. So what the section provides for is the buyer. First of all, we will have to see whether the buyer is a specified person or is he a non-specified person. So if it's a company, so to say, and the company has a turnover of more than 1 crore as business income, so they fall into the category of a non-specified person. So the moment it's a non-specified person, the threshold is a lower threshold of 10,000. So if a company is buying maybe a Bitcoin or an Ethereum for more than 10,000 rupees from a seller, the TDS mechanism or the compliance has to be looked at. So the second category of buyer is a specified person. So it could be a HUF or an individual. And the criteria is they should not have any business income. That is one criteria. Or else, if at all they have business income, the turnover the turnover of the business should be less than 1 crore for a business. And if it's a profession, then less than 50 lakhs. So the minute you qualify as a specified person, you have a higher threshold. So even if you're purchasing Bitcoins above 10,000, you need not comply with the TDS. You have a higher threshold of 50,000 rupees per year. So again, maybe to reiterate how the threshold is to be computed. Basically, while the provisions of TDS have come in only from 1st July 2022, which is a 9-month period for the running financial year 22-23, the threshold of 10,000 or 50,000, depending on which kind of buyer you are, has to be determined for the entire period of 12 months. So right from 1st April 2022 up to 31st March 2023, the entire transaction, what the buyer has with that seller for that period has to be considered. So here, assuming the buyer is satisfying the criteria and there's a requirement to withhold TDS, then what happens? So here it is first situation what we are discussing is cash. So it is pretty straightforward. Maybe if it's maybe simplicity's sake, we'll look at 100 rupee or rather maybe a lakh. So and then 1% has to be deducted from the amount what is being paid, and the deducted amount will have to be remitted to the government, and the remaining percent, 99,000, has to go to the seller. That is how the transaction would happen in case of a cash transaction. And in the seller's hands, what could be the potential implications? So the seller's hand, again, like we discussed, this would be a transaction wherein there is a transfer of a VDI that is happening, and there's a trigger of 115 BPH. So the seller has to offer the entire income what he is receiving from the buyer, and the income would get taxed at the rate of 30%. And like we already discussed, he gets to claim whatever is the cost of acquisition that the seller has incurred in the past, that can be deducted. But assuming the seller is a miner of crypto, and he has incurred mining expenses or development cost, maybe his infrastructure cost, in that situation, he would end up not claiming any expense, or at least the current provision does not enable him to claim any expense. And his gross income, maybe 1 lakh in this case, would get taxed at 30%. plus the corresponding surcharge and such, depending on the case. So that is the implication in the hands of the seller in case it's a there's a transfer sale of VDI by the seller. The second provision which the seller has to look at would be 56.210. So that will deal with maybe once we go to the second situation where the consideration is in kind. Okay, so I maybe I'll take a pause here to maybe if there's any doubt or clarification on the first transaction wherein the payment is done in kind and the seller transfers the VDI.
Suppose seller is a non-resident, whether the tax TDS rate will be under 195 or just 1%. That will be.
So
Seller is NR.
Yeah,
Payment to seller.
So 194S is a specific section which is very much specific to residents.
Yeah.
The other question, 195, whether it will apply or not. So prima facie 195 is a section which will cover all the transaction or all the payments which are made to a non-resident. But the crux is we'll have to see whether that income which is being derived by the non-resident is taxable or not. So like what Venkat has already highlighted, the treaty, the positions under the treaty, all that will have to be looked at closely on the factual aspect, and depending on which country the seller is, we might have to take a call. But strictly, this provision of 194S is restricted to residents.
Okay. And is there any mechanism to know the seller? Buyer may not know the views of seller. The seller is maybe an exchange, right?
Yes, we are dealing with those situations. Maybe we'll
No
take
cases.
a little later because this we are trying to address a straightforward situation, and then we will we'll progress to that. Multiple parties getting involved. Yes.
And another issue, sir, suppose the buyer is paying only inadequate consideration, then what about the gift involved?
So like
Gift tax.
Inadequate. So what you mean? Maybe the buyer he would be he's paying a value. So the fair market value is assuming it is 1 lakh and he's giving 70,000 rupees. So that is where they have expanded the definition of property in the 56.210, which basically taxes the recipient. So 56.210 would want the buyer to, otherwise the differential 30,000 would get taxed in the hands of the buyer under 56.210. So there would be a additional cost. I mean the additional tax which could come under 56.210 on the buyer. But whether that 30,000 can be added to the cost of acquisition, we are still looking. There's no specific clarification. While if it's not for a VDI, we get to add that to our cost of acquisition. But under VDI, we are still awaiting clarification whether we can take a similar approach.
Just to add here, there is no prescribed valuation method for this. So for all transactions, while you may say the market value is 100, the tax guys can come and say it is 150. So this 56.210 exposure is there for every transaction. The tax guys can come and say, because there is no organized valuation method prescribed today to determine what is the fair value. and the second point is, where are these assets located? It may be the exchange may be in India, but these assets may be outside India. So whether and the buyer may be a resident. So the buyer, then there is a foreign exchange angle also to this coming by. Again, the foreign exchange angle goes by valuation. So it's all a circular reference where we any transaction around this, we are going to entangle into a lot of regulatory hazards. Yes, Bhavin.
Sorry, if we don't have, this is the first situation wherein the payment is done in cash. And then moving on to the second situation wherein assuming the payment is done in kind, the buyer is not paying in cash, he is using another medium, and then he's buying the virtual currency. So here there are clarifications provided by the CBDT So what they have clarified is first from the withholding standpoint, what is being clarified is if the buyer is giving a payment in kind, prior to releasing the consideration, the buyer has to ensure that he's paid the TDS obligation or he's met his TDS obligation, and post meeting his TDS obligation only he can release the consideration which is in kind. So there's a clear instruction to say that even if it is, even if there's a shortfall of cash because the consideration is not in cash, or where the entire consideration is being paid in kind, both the scenarios, the obligation is casted on the buyer. He has to maybe gross it up or incur his take out cash and then meet his obligation first prior to undertaking the sale of this or the release of the consideration to the seller. So that is the change here. And with respect to a consideration being paid in kind, other situations like a swap or what an exchange, when an exchange is involved, what happens, we are dealing in the other and in the subsequent situation in the scenarios. From a seller standpoint, I think it would be pretty much the same, except again, we'll have to look at whether that the asset in kind which is received by the seller, whether there could be a separate implication under 56(2)(10), depending on the valuation of that asset which is transferred from the buyer to the seller. Any questions on this situation? Okay, moving on. So this is a situation. So like we all know, there are multiple I mean companies, or there's a larger acceptance to the whole crypto world. Now, like someone mentioned in the comment, there's flats which can be purchased. There can be shops which are accepting crypto. So we are maybe deliberating a situation wherein an employer is actually giving, like we used to have ESOPs, non-cash remuneration, which is maybe in the startup domain. There's a lot of traction which is seen with respect to ESOPs, non-cash remunerations to the employee. Or similar fashion, we are trying to evaluate what if an employer would like to pay his employees using cryptocurrency. So here,
So your screen is not shared, sir. Your screen is not shared. Please share.
Let me just reshare.
It is visible for me. Okay, you can reshare.
Screen,
Please.
It's visible.
Visible.
Yeah,
Okay.
It is visible. For me, it's visible.
Yeah.
Other?
Yeah. So yeah, moving on. So the employee is rendering service to his employer, and the employer is making payment using cryptocurrencies to the employee. So what are the possible implication which both the employee as well as the employer has to keep in mind during the transaction? So first, this could be treated as two separate transactions. One is
Nanda sir എല്ലാം join ചെയ്തേക്കാണ്.
Okay, then we'll.
എല്ലാരും join ചെയ്തിട്ടുണ്ട്. Good afternoon, everyone. Shall we start the inaugural session?
Yeah, sure.
Honorable Chief Guest, Central Council Member C.A. Charanjot Singh Nanda sir, our Regional Council Member C.A. Satishan P, Respected speaker of the session are Venkatesan and his team, chairman of all 8 branches, CA Sabu CS Kollam, CA Sabu Thomas Kottayam, CA Martin Joseph Alappuzha, CA KV Jose Ernakulam, CA Ajit Kaimal Thrissur, CA Anuja Jayakrishnan Palakkad, CA Santosh Pai G Kozhikode, and CA Shiv Prasad K Kannur, and their managing committee members. It's a pleasure to be part of this Navaratna conference, and we are at the 3rd year. During COVID, it was a necessity. Now we enjoy the togetherness. At this outset, we would like to mention the efforts taken by all the founder chairmen of nine branches and its committee members in the year 2020 under the able leadership of the then Central Council member and Regional Council member for constituting such a wonderful avenue for knowledge sharing. First of all, I welcome our honorable chief guest, CA Charanjot Singh Nanda sir. He is a dedicated personality who is serving the ICAI over a decade at various levels. All of us know the kind of efforts he has put in at various committees across these years. We are honored to have you with us as our chief guest. On behalf of all the branches, I extend a warm welcome to Nanda sir.
Thank you, Mr. Charanjit Samuel.
Yes, sir. I would like to welcome CA Satishan P, Regional Council member and SICASA chairman of SARC, and our one and only representation at ICAI. We appreciate the efforts taken by Satishan sir for the smooth conduct of this conference, ensuring equal importance to all the branches. On behalf of all the branches, we once again welcome the speaker of today's session, CA Venkatesan R, to this session. Already about 250 participants has joined the session, and the success of this conference depends upon all the participation of all the members of this fraternity. We extend a warm welcome to all the members joined with us. Thank you all. And now I invite our Regional Council member, CA Satishan P, for the opening remarks.
Thank you, Charanjit. Respected Chairman of Thiruvannthapuram branch, Charanjit. Then now today's chief guest, our beloved CCM, Charanjit Singh Nandaji, and Vice Chairman of the branch, Ramakrishnan sir. Then Secretary Nikhil, SICASA Chairman Julie, and other managing committee member Rema and Srividya, and all other eminent and dynamic chairman and chairperson of other 8 branches, and senior members of the profession and my colleagues. Very good evening to all of you. I am extremely happy to be part of this Navaratna conference. Today we are going the process on 8th day. Tomorrow we are going to have the valedictory function, and our Vice President accepted for the valedictory function to come and participate as a chief guest, and also our SARC Chairman and Secretary also joining on the valedictory function. So we are lucky with validating or completing our Navaratna program tomorrow with all these eminent faculties, eminent personalities. And today's faculty, Mr. Venkatesan sir, regarding the subject, new subject regarding that digital currency that is going to be implemented in India also, and discussing with his team. And our CCM, Nandaji sir, always in forefront all the activities, and giving us a very, very interestingly he spoke regarding in a very lofty manner. So once upon time I heard his speech at Thrissur. So I thank sir for your participation as a chief guest, and I wish all the success for the 9 days program, and congratulate all of the chairmen who actively participated on the managing committee members for their active participation. And one important announcement for all of you, from 21st and 22nd, Thiruvannthapuram branch is going to have a sub-regional conference. So I welcome all of you to the sub-regional conference, 21st and 22nd. And the subject is very good subject we had selected. So all of you, I welcome all of you for the subject, for the seminar. I hope that it will be a good session. So I welcome once again, welcome all of you to Trivandrum. The program will be conducted on SP Grant. I hope that all of you, all the members has been already received the mail from SIRC. And many of the our chairman, secretary, and other council members also joining the program. I welcome all of you for the program. And thank you all the chairman for your active participation and doing the seminar in a good way. I wish all the success to the future endeavors also. Thank you.
Thank you, Sadishan sir. Now I invite the Vice Chairman of Thiruvannthapuram Branch, C.A. Ramakrishnan H, to formally introduce our chief guest.
Good evening and greetings to one and all. C.A. Charanjot Singh Nanda is a Central Council member of the 25th Council of the Institute of Chartered Accountants of India, ICAI. Present designation is the Chairman of Digital Accounting and Assurance Board, ICAI, Internal Audit Standards Board, ICAI, Committee on Information Technology of South Asian Federation of Accountants. He is the Vice Chairman of Banking, Financial Services and Insurance Committee, ICAI. Positions held: Member of the Central Council of the Institute of Chartered Accountants of India, 2004 to 2016, and also from 2019 to 2022. Chairman of the following committees of the Institute of Chartered Accountants of India: Committee on Management Accounting, Committee on Internal Auditing, Committee for Members in Industry, Women Members Empowerment Committee, Committee for Cooperatives and NPO Sectors, Committee on Banking, Insurance and Pensions, Committee on Financial Markets and Investors Protection, Continuing Professional Education Committee, Public Relations Committee, Research Committee. Vice Chairman of the following committees of the Institute of Chartered Accountants of India: Public Finance and Government Accounting Committee, Continuing Professional Education Committee, Corporate Social Responsibility Committee, Banking, Financial Services and Insurance Committee, Research Committee. He was a member of Quality Review Board set up by the Government of India, member of SEBI Advisory Committee on Primary Markets 2007 to 2010, and Committee on Mutual Funds 2007 to 2010, and represented ICAI on SEBI Committee on Disclosures and Accounting Standards, SCODA. Convener of the expert group constituted by the Ministry of Corporate Affairs, Government of India on Investor Protection. Member of the Southern Asian Federation of Accountants, SAFA, on Committee on Professional Accountants in Business, PAIB, and Committee on Improvements in Transparency, Accountability and Governance. Member of the Northern India Regional Council of the Institute of Chartered Accountants of India for 2 terms, 1998-2001 and 2001 to 2004. Chairman of the Northern India Regional Council of the Institute of Chartered Accountants of India, 2002 to 2003. Treasurer of Northern India Regional Council of Institute of Chartered Accountants of India, 1998-99, 1999-2000, and 2001-2002. Academic pursuits. Contributed as guest speaker at Surrey, Vancouver, Canada, British Columbia, chapter of ICAI on IFRS, Effective Communication and Forensic Accounting Seminar. Contributed as a guest faculty, program coordinator at various seminars and conferences organized by the international bodies and Northern India Regional Council of ICAI, WRC, CARC, EARC, SIRC, and branches and study cycles of NIRC of ICAI. Has made presentations and chaired sessions on overview of the proposed GST regime in India and its comparative analysis, overview of IAS 12 on income taxes, overview of IAS 18 on revenue, overview of financial accounting and auditing standards, IFRS, ICAI, INTO SAI, IPSAS, International Conference at Kathmandu on WTO and trade laws, Presentation to HR professionals. International conference at Kathmandu on capital market, the way forward. Presentation before government bodies. Presentation on overview of SOX. Professional opportunities for chartered accountants to act as independent directors. Effectiveness of CAs to act as independent directors. Proceedings before disciplinary committee. With this, I have immense pleasure in introducing to you our Honorable Central Council member, CA Charanjot Singh Nanda. Over to you, sir.
Thanks a lot, Mr. Ramakrishnan Harayar. You took me through the memory lanes right from my days when I started my regional council. I was a part of SCODA till today. The chairman of Thiruvannthapuram branch, CA, Chiranjeev Samuel, chairman. He's similar to my name. My name is Charanjot. So if I put Chiranjeev, then it will seem very similar. Mr. Stephen P., the Honorable Regional Council member, my very dear friend, Mr. K.V. Jose, chairman and Akram branch, Mr. Siva Prasad, Madam Julie Varghese, and all who have come here to go home more enlightened. I'm sorry, ladies and gentlemen, I'm in a t-shirt. The reason being, I have just landed from Dhaka. I was in Dhaka. So when the chairman, Mr. Samuel, gave a call, I said, sir, please pardon me. Maybe I'm not able to join at 3. He said, you have to join whatever time you want. And he was benevolent and kind enough to allow me to speak and address you all. Ladies and gentlemen, our institute, the Institute of Chartered Accountants of India, was set up an Act of Parliament way back on 1st July 1949. When the most important document to the democracy, the Constitution, was not adopted. You are all aware that the Constitution to this country, great country, was promulgated on 26 January 1950. The pertinent question that arises is what prompted the Constituent Assembly to set up an Institute of Chartered Accountants of India when its own democratic setup was not in place? The answer is very candid, very simple, very forthcoming. They were looking for a disciplined band of soldiers to steer this country out of confusion. I speak to the brand ambassadors of this great profession. Ladies and gentlemen, when Mr. Samuel introduced me about the theme of this session, digital assets, I want to move away from the topic and tell you that 20 days back, I got a call from the SEBI chairperson, Madam Madhuri Buch. They were looking for something on digital assurance. And I want to tell you, the institute has prepared a paper and given to them. Now, any regulator sitting at his home can look at any item of revenue in balance sheet, any item of profit loss account, except two things. One is depreciation and other is employee benefit. How many number of people go to PF? What is the turnover? Go to GST. What is the export turnover? DGFT. Everything is now. We are giving a request to them. We are sending that what support we want in terms of LODR. Any bank balance of your client, once SEBI says that this is your client, you can simply from your home at the end of the day, you can look at the balance, what balance has been given and what is the actual balance. Technology has changed our life. Mr. Hariharan did not tell that I am now the chairman. Why I went to Dhaka? I am the chairman of IT committee of 8 SAFA countries. I am now totally dedicated myself to ensure that we bring technology for people who are on not understanding technology. We have coined a program by the name of Technology for Non-Technology Professionals. We will now, within 1.5 months, present before you a virtual program wherein anybody 70 years can sit at his home and do a very nice study on technology. What technology he needs, how he wants to use the technology for the membership at large, how he needs it not only for servicing his clients or stakeholders, but the regulators and government as well. I want to tell you that the institute will only move with perpetuality. A boss in an office recited, cracked a joke. All started laughing except of one man. So he said, gentlemen, don't you understand my joke? He said, no, sir. I have resigned yesterday. Things have to move in sync. We have to create infrastructure because, my dear friends, chartered accountants now feel suffocated. They don't have much avenues. We have to create value and worth by coming to newer areas, technology. You go to blockchains, you go to artificial intelligence, you go to Internet of Things, you go to data analytics, you go to systematic analysis, you go for information system audits, information supports, cyber crimes, support on detecting cyber crimes. They are all an integral part of what chartered accountants need to do. Your institute has made great strides in terms of technology. Let me tell you, there is the Institute of Chartered Accountants of India is a constituent member of IFAC, International Federation of Accountants. And we were the first to come out with guidance on remote audit way back on 30th March 2020, when COVID had barely started. Your institute, under the aegis of DAB, Digital Accounting and Assurance Board, has come out with 23 forensic standards, the first of its kind in the entire world. As a child, I used to listen to forensics, and I used to think it is something which is very foreign, which is very not indigenous. Today, we have come out with 23 forensic standards. SAFA board has requested that we percolate that to all SAFA countries. The PAFA people, the Western people want us to give those standards to them. My dear friends, I have only one call to make. Ensure that every chartered accountant, every article who comes in your contact understands the value of technology. Technology gives us three very important benefits. Number one, you did not go on sample if you are going on technology. 100% data can be taken care of. And in today's time, neither money, nor dollar, nor gold, nor oil. You need only data to grow big. Second important thing, no lethargy. Today's Christmas, today's Guru Parab, my wife's birthday, Diwali. For a robot, there is no Diwali. And you'll be happy to know that as low as 5,000, you find a accountant who does all the entries 24 hours a day. He doesn't want to sleep, he doesn't want to eat, he doesn't want to relax, he doesn't find the work monotonous. And third important thing, IT gives you work which is error-free. No error in work done by IT, because they are not human beings who get bored, who get monotonous, who want to leave, who get disturbed. No. So ultimately, we have to scale our capabilities for creating intelligence which machines can't create. Technology will always rule the roost. I can tell you, chartered accountants who do practice of technology work for 4 hours a day and are more than a band of 100 chartered accountants. Internationally, they are called, there are not much people in technology. And we have just started from the base, technology for non-technology professionals. It can be as senior as Mr. G. Santosh Pai and as young as Mr. Nikhil Kumar. Any person, Madam C. Rima Sharma, any person who wants to know technology, technology will come to your doorsteps. And people who learn technology, then we have a second advanced course on technology where people can go. So I wish this conference a great success. In fact, I'm thankful to Chairman Mr. Semil, who had called me on 8th also, but unfortunately, I'm the chairman of 2 committees, Internal Audit Standard Board and Digital Accounting and Assurance Board. And they take so much time. It demands so much time and attention because of all across IT is something which is too much sought after. So I couldn't come here, but I look forward to come to Kerala anytime whenever I get a chance. Coming to Kerala, I like a lot because I can say I have very fond memories of Kerala. I can see Brother Joman K. George.
Yes, sir. Joined a little late. Sorry, joined
no,
just to hear you.
Joman,
I was listening.
It is better late than never. I want to share one relationship with Joman. I was in Dubai. We are 2 brothers. I have a younger brother. So whatever I need, he will give me. Sabu Thomas has also joined. Welcome, Mr. Thomas. So when I was in Dubai, I wanted tea and coffee. And Joman ensured that when I said tea, it was on my table. Highly hospitable, highly involved. I remember my brother Babu Abraham. I remember so many friends from Kerala. VC Jose was with him in the regional council. With VC James was with me in the central council. So many people. And Kerala people have great flair of being helpful to all council colleagues. I can tell you, the person who comes from Kerala is the most popular in the entire council. The reason being, well-mannered, sophisticated, and ready to help. That attitude is very important. So I can say only one thing: whenever you need me, I am always there. I am a part of you. I'm sorry that I may be a bit busy, but whenever you want anything, any program you want to do on technology, on internal audit, please go ahead and do it. I give my full confidence to you. Any area you want to go into, you want to go into a hands-on practice session on IT, say Excel, if you want to do something on data analytics, if you want to do something on artificial intelligence, the board is always at your beck and call. The basic purpose of chairing this board is to ensure that we take technology to the doorsteps of people. So I want to thank you all for giving me this opportunity, particularly Mr. Samuel, who followed so much rigorously that when I was in the plane, my plane landed, the phone of Mr. Samuel was there. Where are you, sir? Whatever he said, what it. So this is something which will always give you a lot of love and confidence that we are amongst friends. So I thank you all. Anything I can do for you would be great. Thank you. Thank you.
Thank you, Nanda sir, for your electrifying inaugural address.
Sir, sir.
Now I invite our past chairman of SIRC, C. John K. George, to give addresses gathering.
Thank you, Chiranji. I think members are waiting for the technical session from the expert, CA Venkatesan. Good evening to all of you. Chairman of the Thiruvannthapuram branch, the host branch today, it's Chiranji Samuel. I was taking lead for today's NAVARATNA day 7. And a very special guest, Nandaji cannot be called a guest, has been free. Day 8, yeah, thank you. And Nandaji has always been supportive of all the South, particularly Kerala branches. So many times he has come to Kerala, and I had the good privilege, as he mentioned, traveling with him across in the country and also a few times in Dubai. So he's a great motivator, and from the short speech, he has covered everything, the topic and how chartered accounts should conduct themselves moving forward, imbibing the best possible practices and also leveraging substantial of technology. Thank you for your continued support. Last week, you had given a program to Trivandrum branch, given to understand. Thank you so much, sir. Hope to meet you soon at some point of time. And thank you once again for that. And Sadishan, the sole RCM from Kerala, the chief architect or the lead convener for the NAVARATNA conference. Other branch chairmen who are on screen, I can see Jose there, sir, Shivprasad sir was there, Sabu Thomas was there. He was moving around, traveling. So other 8 Ratnas and dear colleagues, extremely happy to be with you. And NAVARATNA, moving to the final last lap of it. Today is the 8th day, and tomorrow we have the finale. So as we have seen, a lot of topical discussions, a lot of interaction, camaraderie between the 9 branches, not really just the chairman and the managing committee members also. And since I'm in the WhatsApp group, which is discussing NAVARATNA, I know the kind of effort which is going in. Once again, my sincere compliments to all of you, and Sadishan sir for all that you have been doing, as a bonding force for all the 9 branches, you being the sole regional council member from Kerala. And so happy that Chiranji invited me to have a few words with you. So it is back to the chairman at Trivandrum branch. Thank you for the opportunities. Thank you, Nandaji. All the best. Happy learning time. And Venkatesan sir also special word of gratitude from me for sparing your valuable time. We're looking forward to your technical session. I may have to sign off in between, but then I'll be mostly tuned for the program. Thank you, everyone. Thank you so much.
Thank you, everyone. I also would have to sign off because the council is on progress. Thank you so much. We'll be in touch. Thank you. Bye-bye.
Thank you. Venkatesan sir, you can resume the session.
Yes. So we were in the Robin, can you flash the screen? We were in the case studies, case study 2. Robin, over to you.
Yes, yes, sir. So yeah, in this second case study, what we were discussing was on a scenario wherein the employer is remunerating the employee for services through cryptocurrency. So again, what could be the potential implication for this transaction from a employer? So basically, while this might look like a straightforward, simple situation, from a tax implication perspective, we'll have to maybe break it down. There would be two steps. One is a normal scenario wherein an employee is receiving salary or a remuneration. So the employer is liable to deduct, as we all know, he's liable to deduct TDS on the salary which is paid to his employees. So that is the first obligation on the employer. He will be deducting TDS on the salary. And the second more important thing is on the valuation. So because this being given in cryptocurrency, how does the employee value it? That is, like we said, it is still open. We don't have clarity today. And then from an employee perspective, or the employee here is receiving salary, that is one, he will be offering it in the form of cryptocurrency. He will be offering it as salary income, but at the same time, since he's kind of the recipient of crypto, there would be an additional compliance on the employee. We'll have to again see whether he's a specified person or not, and depending on that, we'll have to look at the thresholds. And once he's if it exceeds the threshold, then he will have to do withholding under 194S. So here again, the entire consideration is received by the employee is in kind. He doesn't have any cash, but there's an obligation for the employee to remit taxes. So how does he deal with it? That is one practical aspect. What can be suggested is maybe the employer can fund him in cash, and then the employee makes remittance of the taxes, and then provide a deduction certificate to the employer, so that he's compliant with 194S. And the second aspect would be on the employer. This being a transfer of crypto asset or VDA, he would be liable to tax under 115 BBH on the amount which is kind of paying the employee. If not for the crypto, he should have actually incurred some cash. So on that, under 115 BBH, the employer would be liable to pay taxes at a 30% rate without, and all he gets to claim is his cost of acquisition. And the next is what happens maybe down the line when the employee wants to sell his crypto to a third party. So how do we go about determining the cost of acquisition? So the cost of acquisition in this case, practically, while we can maybe take a position to say that the perquisite or the amount which was offered by the employee as salary income when he had received the crypto, that could constitute his cost of acquisition. But unfortunately, the law is still silent. While they have said the cost of acquisition is eligible deduction, what will constitute cost of acquisition under all these scenarios are not laid out. We hope there could be further clarification, which will help us have a concrete answer to this. So that is on scenario 2. From any other questions? Venkat, do you like to add any points here?
I think you have covered here. Unless people have questions, we can move to the case study 3.
Sure. So case study 3 is predominantly dealing. So now we have dealt with a normal situation between, or the compliances which the buyer and the seller of crypto will have to undertake. Here we are trying to focus on a situation of from the standpoint or perspective of a crypto exchange. So assuming, like we all know, the customer would place an order for a crypto, maybe a Bitcoin, with the crypto exchange. And there could be situations wherein they interact with another crypto exchange, or it could be a third party who will be giving the cryptocurrency to this exchange. So there would be a back-to-back order for purchase of this Bitcoins. And then what will happen is there would be the second exchange provides a Bitcoin at a lower sum, and the first exchange maybe a 99 rupee and 100 rupee in this example. So what difference has the new provision made for crypto exchange. So we may be going back, taking a step back prior to introduction of 115, what would typically happen is the crypto exchange would offer any of this gains under a business income, whatever they are deriving on this transaction, on this transfer of this Bitcoins. And they would be taking the expenses, whatever general expenses, business expenses that would incur in their normal course of business. And net amount would be getting taxed. And depending on what slab, whether they are opting for concessional regime or 22% or a normal 25%. So typically, if they fall into 22 or 25, they would be offering the net income post expenses for tax. So now, because of this whole new provision, the tax impact on exchanges have drastically increased. So there could be a significant jump because your taxable amount in itself is gone up from a net basis to a gross basis. That is one. The second most important is this: the tax rate in itself also is gone up by, maybe depending on the rate, maybe an 8% to a 5%. There's an increase in the slab rate which will apply to crypto exchange. So here the business model, what is being typically followed, whether they will have to relook at it, have a more structured approach wherein maybe they can clearly bifurcate their business income and their crypto income. But ultimately, there could be a significant addition to the tax cost what the exchanges would end up bearing. Any points here? Any questions? Like we discussed, even if the crypto exchanges have kind of generated the assets, they would know any infrastructure cost or a development cost that would not qualify as deductible expenditure. So those are critical aspects from an exchange point of view. Moving on. So this is another practical situation, like we have fixed deposits with banks. There are exchanges which offer fixed deposits of Bitcoin. So they call it Bitcoin stake. So what is Bitcoin stake? It is kind of Bitcoins which are deposited with the exchanges for a longer duration. So the original owner would not be in a position to sell it or even do any kind of transfer on that for a substantial time. So the original owner, how he benefits out of this is the crypto exchanges typically remunerate them in the form of interest, or the interest payout also would happen in the form of VDIs, cryptocurrencies. So in this particular example, the user, he's depositing 100 Bitcoins with a crypto exchange. And after a period of time, the crypto exchange would transfer 1 Bitcoin, which is in relation to the interest in the normal parlance, to the user. So here, again, the user is receiving a VDI. He would, under the provisions, he would fall into the category of a buyer, and there's a transfer which is done by the crypto exchange of that 1 Bitcoin, which is paid out as interest. So the crypto exchange would have to comply with 115 BBH, and then 30% will be his tax on the interest that he pays out. At the same time, the user would do whether he has to do a withholding, because 194S asks them to do a withholding. So that is another question. And the valuation of the VDIs. So how do we value that 1 Bitcoin? At what point in time do we value? So those aspects also will have to be closely looked at on such transactions. So whether subsequent sale of this 1 Bitcoin by the user, whether what would be the cost of acquisition? So if he's offering this interest as other sources, whether he gets to take a benefit to say that whatever income was already offered as the cost of acquisition of those cryptocurrencies. So next situation here, the both this transaction, or it's a swap transaction. So one person is transferring a Bitcoin to another person, and the second person in turn is giving Ethereum to the first person. So here the consideration is in kind. We have already discussed on the situation, what happens when the consideration is in kind. So the buyer in this case, or the both of them will have to be, there will be two transactions. Again, it will be treated as two separate transactions wherein Bitcoins or crypto VDIs are being exchanged. And respectively, the buyer and seller would have to comply with TDS under 194S. So what will happen here? There could be two potential situations. One is the whole swap arrangement is happening off the stock exchanges, or rather the exchanges, the crypto exchanges, wherein only the buyer and seller are parties. So there will be two parties. The second situation is wherein there's an exchange which acts as an intermediary between the buyer and the seller on this transaction. So the first situation, we'll maybe discuss the implication in the first situation, where it's a straightforward transfer between the buyer and the seller without a exchange. So here, like we discussed, the buyer would do a 194S when he's buying the Bitcoin, and the transaction, there's no provision to withhold in kind when it's a peer-to-peer transaction. So the amount of TDS has to be remitted in cash by the buyer prior to he releasing his 5 Ethereums to the seller. So again, in this situations, similarly, the seller would also have to pay the TDS liability first and then release the Bitcoin. So it is cyclical, but the department guidelines are more to say that it has to be complied upfront, or the TDS liability has to be met in cash, and then the consideration can be released, wherever it is in kind. So that is the first situation. And the valuation or the service cost related exemptions are not really being covered. So what the notification of CBDT has provided is the consideration which is getting offered to tax can be net of GST. That is one component. And the second component they have mentioned is any service charges what is being levied on those transactions. So here in this case, peer-to-peer, the service charges component is not mentioned, maybe because there's no possibility of service charges there. That is one reason. But there could be other related costs which they have to pay to the developer and all that. So that those kind of cost, at least the CBDT on a peer-to-peer transaction have not allowed those as deductions. So it will be net of GST alone. You will have to comply with your on the just net of GST amount. You'll have to deduct your 194 as 1%. So going to the second situation where there's an intermediary between the seller and buyer in the form of a crypto exchange. So here what CBDT has given a detailed guideline on what is the approach that is to be adopted. So basically the obligation, like we discussed, is on the seller as well as the buyer. There will be, both of them are responsible for withholding taxes for the to both the legs of the transaction. So here they have given a relaxation to say that if there's an arrangement, an agreement between the buyer and the seller, the exchange can take up the onus. The exchange can kind of take up the onus to remit the TDS obligation and the related compliances. They put some additional measures wherein they have said there would be an additional reporting which is to be done by the exchange in the form of 26 QF. While the form is not yet notified, that is what they said. So the such transactions where the exchange is acting as the as the primary responsible entity, they will have to report to the tax department clearly saying these transactions, I am responsible. I have already remitted the TDS. So that is the arrangement. So they would be relieving of the seller and the buyer, because otherwise the onus is getting spread on multiple people. I think the department wanted to simplify things and give a straightforward approach. So practically looking at how most likely the exchanges would want to do the compliance from their point in by themselves, rather than putting the onus on the buyer and seller, because that may not be very much attractive or taken positively by an individual or somebody who's trading in crypto. So now this whole transaction being in kind and not in cash, how does the exchange go about deducting TDS and remitting to the government? So interestingly, unlike a peer-to-peer transaction wherein there is no provision of deducting the or keeping aside one portion or 1% of the total VDI which I'm transferring to the person, they've given a relaxation for the exchange to keep aside. So assuming there's 100 Bitcoin which is being transferred by the exchange, the provision allows the exchange to retain 1 Bitcoin towards the TDS and then transfer the remaining 99 to the buyer. So the advantage is there's no cash outflow immediately, or the exchange will not have to, because they're only acting as an intermediary. So they don't want to put their cash into the whole mechanism. So they would pass on whatever is net of the TDS obligation to the buyer. So then what happens? So how do they remit TDS using the cryptocurrency? So there also the government has given a clear guideline. So there could be two possibilities. The exchange could be, so there are, like we know, there are primary VDIs or cryptocurrencies like the likes of Ethereum or Dogecoins or Bitcoins, which are freely convertible into INR. And there are no recent players which have come in, which don't have that much of an appeal, at least. And so some of it may not be convertible into INR, but the transaction can still be in a secondary cryptocurrency, which is not directly convertible into INR. So the guideline provides that if the transaction is on a secondary crypto, other than any of these Bitcoins or Ethereum, the exchanges will have to do the end of the day, they will have to figure out how much is the total accumulated or the set aside cryptocurrency that they're holding towards the TDS settlement. And if some of it is in secondary currency, they are asked to convert it first into a primary currency VDA. And for that, they are given an instruction to place a market order in the exchange and then sell that primary VDI. And on selling of this primary VDI, they would be receiving INR, and using the INR, they will have to remit it to the government and give an acknowledgement to the buyer or this to the seller. So that is the whole mechanism. So things have kind of, they've tried to make it a little easier from a normal buyer or seller perspective, and they have allowed the exchange to take that additional burden, and there are additional compliances which are put forth. And like the whole process of exchange converting the secondary VDI or the primary VDI into INR, those are again transfers. So what happens with those transfers? Because the secondary VDI getting converted into the primary VDI, that is one transfer. So again, your primary VDI getting converted into secondary VDI, I mean, to INR is another transfer. So the CBDT has clarified any transaction wherein the exchanges are trying to liquidate or get INR using the withheld cryptocurrencies, those would not be liable for TDS. So there's a carve out which is provided under the clarifications to say that these are not a transaction which would trigger TDS obligations. Yeah, maybe I'll pause here. Any questions? Because this is something which is a little maybe not very straightforward, but the department had gone ahead and given a detailed guideline on this, I guess.
The government will not accept TDS in the form of crypto right now, right?
No.
In future, they may have to. I think in future they may have to.
Yeah. There were two questions asked in the forum by Mr. Iyer. One was on the whether how department will accept TDS on the value of the crypto. Yes, as we discussed earlier, the valuation is a big question. Still, there is no formal guidelines on valuation. So the value on which you and your employee are recognizing that as a value for his employment, and then you doing TDS on that, you may have to top up the cash, because crypto, you'll pay him in crypto, but TDS have to be 192 has to be in cash. So you will have to gross up the crypto value, whatever value you think is right today, and that under grossing up. Secondly, department can come back saying that the value in which you thought is the value of the crypto on which you did 192, we are going to challenge that, because we feel the value is much better, because maybe after a couple of months, the employee made a windfall gain there, and then the valuation jumped 10x, and that was not estimated in the valuation when you made payment to him 2 months earlier. So yes, it's a gray area. You will, unless and until the valuation guidelines are clearly framed, there's going to be debate around this, and there's a risk hanging in your head there. The second question was the crypto value going down recently, and then you incurring a loss, whether that loss will be allowed as expenditure. As we said earlier, the government is interested only on the gains. It is not interested on loss. If you make a loss, it is to you. If you make a gain, it is to the department. Have I answered you, sir, Mr. Iyer? Hope I have answered, Mr. Iyer. We'll move on. Yes, Bhavin. This is the last case study, no?
Yes, this is the last one. Yes.
Please.
So yeah, this is pertaining to not cryptocurrency, but it is the gaming company issuing coins. So typically when some of the game zones, or rather the virtual world, the gaming world, there would be points which will be accumulated by the players depending on which stage of the game they are in. So here what happens, or first of all, I think one question we have already answered is kind of whether this will constitute VDA. Here being an virtual asset, this is a code, or it is something which is there, and then it's not a foreign currency. And this unique, while it is in the virtual world, this coins or points which are there, the gaming coins, might end up having some real value in the real world as well. So assuming this constitutes VDA, once the gaming company is issuing the coins to the user, and whether the the compliances would be, the gaming company will be considering, they'll have to consider is to be a 115 BBH transaction, wherein they are transferring coins. But since these coins are developed by the company itself, it is not that they purchase and then they give it to anybody. So these are coins which are part of the game and which is developed within the game. They will have to consider this and offer it to tax at a 30% on gross. That is a little strange, but unfortunately the provision that does not allow us to take any development cost incurred. And from a user standpoint, again, whether they'll have to comply with the 194 as withholding, even though on the receipt of these coins. And how do the user utilizes, or what could be the potential implication? So the user, he might use it, consume it during the game itself. That is one probability, or he might even transfer those points wherever it's possible, or the coins to another ex party for consideration. So those kinds of transactions, if he's transferring to a party, what would be his cost? So those are open aspects, because while maybe the government also has not given any clarification on these kind of, maybe not the currency bit of things, while I think the clarifications have come in to some extent on the cryptocurrencies, and the second clarification was on NFT. these kind of coins which could and have value in the real life, those are points which we are still awaiting clarity from the government. So yeah, other aspects related ones are like the RBI is also coming up with, at least they are proposing a digital currency now. But whatever, there's no official confirmation, but whatever the news carries is so to say that this could be more like it will be at par with the normal physical currency. It would be merely a digital in form. It may not be like a crypto in itself. It would be a real rupee or a fiat currency which will be carried in wallets and can be transferred across. That is one point if you wanted to add. Yeah, that is on the case study. If any questions, happy to answer.
Yeah, so we will move on. There is one topic on GST that we have not touched as yet. This is the last topic. So is GST applicable on these transactions? Whether it will be goods or it will be services, the ambiguity again continues. What is the valuation that needs to be adopted if GST is applicable? So whether it will be treated for subject to GST, whether it will be treated in line with securities or mutual fund units where GST is not applicable. So those types of clarifications need to come. And more so, this gets even more complex where the buyer is in India, seller is outside outside India, and the VDA is in India, outside India. What happens? Or vice versa, if the seller is in India and the buyer is outside India, the VDA is in India, the seller is exporting the VDA, will there be GST? On the contrary, if the buyer is in India, the VDA is outside India, the seller is importing the VDA, will there be GST? All of these ambiguities are at large. Definitely, GST is applicable on one area here, on the exchange service fee, which like your today broker, the exchange and broker service fee will be subject to GST under services. Rate we need to see, but it will apply. But whether on the entire transaction will there be GST or not, still a clarity needs to come. And more specifically, where the location of this VDA is very uncertain. It's very fluid because it's all in digital formats, and then we have to see where the server is located physically. Does it is it housed there, and should we consider that as the state in which the GST is done, or should we look at the overseas jurisdiction for applicability of the respective VAT or GST in that country when the transaction happens? What happens to where the buyer and the seller are in India, but the VDA is outside India? These are questions looming where we don't have answers today, but probably this will evolve, and then we will get to these clarifications soon as the traction in this particular area increases. And then maybe once government comes up its own digital currency, you will see a lot of these regulatory aspects also coming inside. So with this, we are done with our analysis of digital taxation. We are open to any questions. We have answered all the questions in the chat box as and when while we are doing. If you have any queries on top of that, we are available to answer any questions. Bhavin, you can pull down the screen.
So what about RBI releasing digital currency now? Is it a crypto or just a digital asset?
No, they said they will release a digital currency which is akin to your current currency. So if you have a 2,000 rupee note, maybe you will have a 2,000 rupee digital currency.
Okay.
So
that means at par.
At par.
Not a daily movement will not be there. Okay.
It should not be. That's what they said. It will be at par.
That should be the otherwise, sir.
So it is like your GPay then after that. So we have to
can we now say that the government has more or less approved cryptocurrency now legally? Can you say that?
Now that they started taxing it, so taxation law is very wide. It can even tax illegal incomes.
Yeah. No,
So-
I mean,
so-
no, that I got. But whether they legalized, can we say that they legalized? No, not yet.
They have not come to
Not
that stage as
Yeah.
yet to boldly say we are legalizing it.
Yeah.
But they have
Suppose
said that
they-
we are.
Suppose GST law is set, then we can say that
Yeah, GST
It's
will
legal,
follow.
right?
GST will be the last tail in the
Yeah.
whole stack, because once all the system is put in place, then GST will come. Because once GST comes, then GST will talk about valuation.
Yeah.
Then RBI has to come out with valuation because there are cross-border transactions here.
Yes.
So that has to. So the first thing is they started collecting the revenue from the tax side of it. You make gains, you pay me the tax first. Then we'll see whether it is legal, illegal, valuation, GST, all of that we'll see later.
So there is a new question in the Q&A session.
Okay.
Amount received on sale of cryptocurrencies, net of exchange fee and other charges, is it allowed to be deducted by Ravinath?
Yeah, so that they have clarified that expenses in connection with the transaction is allowed. Only thing is, if it is a secondary transaction, acquisition of the cryptocurrency also is allowed. If it is a primary transaction and you are the miner of the crypto, then the cost of development or mining cost is not allowed. Again, wherever foreign exchange is involved, definitely FEMA angle needs to be seen, and they are very hard of late. Even for simple compliance, RBI FEMA is very hard, and they just follow for 2, 3, 4, 5 times. After that, they transfer the case to ED. And once your file goes to ED, it never dies for your life. You may be cleared, but the file doesn't die. So on all this crypto foreign exchange transaction, little bit cautious is necessary.
I think we are done with questions. Any more?
Yeah, I didn't see anything in the chat box also.
Shall we wind up the
One
session?
Bitcoin is $20K now. One Bitcoin is $20K now.
Yeah,
I
so
think
what they're doing is
around-
you don't get to buy the entire Bitcoin. They break the Bitcoin into units of 1,000 units, 2,000 units. So like mutual fund, you don't get to buy Infosys. So you buy units of it. Similarly, Bitcoin also, you get to buy units of it. So per unit will be much lower.
So we can buy fraction also, right?
Yeah.
Fraction
So
also.
that is what
Yeah,
each
yeah,
Bitcoin is
that's-
divided into multiple units as fractions.
Fraction.
So you buy one unit, which will be maybe $1 or $5 or something.
Yeah. And this app is good, sir, for buying. So several apps are there. Whether it's secure, so many. We can't say.
I'll be cautious here.
Yeah.
Many of these apps or all of them have their own problems.
Yeah.
So-
Last week some scam broke out on yesterday
Yeah.
also.
So we have to be cautious. It's very risk appetite. So if you have the risk appetite, go ahead.
No, sir, any registered app there? Registered app we can rely on? Is there anything
I
like
don't
that?
want to be propagating
Okay,
an app.
okay.
in the forum.
Okay. We'll talk personally. Okay, sir.
Shall we wind up? Okay, thank you, Venkat sir, and your team for the comprehensive session. Now I invite our secretary, CA Nikhil Kumar, to deliver the official vote of thanks.
Respected Chairman, Chief Guest for the day session, CA Charanjit Singh Nanda, faculties, CA Venkatesan and Bobin Simon, Chairman of SICASA SIRC and Chairman NAVARATNA Conference, Satishan sir, and Chairman of all branches of Kerala. Thus, we have come to the end of today's session of NAVARATNA. NAVARATNA, the concept which stands unite all the 9 branches of Kerala to host a synchronous event. mega event of this scale to be organized require person of good leadership and is futuristic. We are indeed lucky to have a perfect person for the spot. I thank CA Satishan sir for his efforts in conduct of this program. Not to forget, I offer sincere gratitude to the past chairman of SIRC, CA Jomun K. George, for his mentorship role for all the branches of Kerala. I also thank our chief guest, CA Charanjit Singh Nanda, in his absentia, who despite his busy schedule has managed to allot time for the day's program. The speaker, CA Venkatesan and Bobin Simon. Sir, to be honest, for majority of us, digital assets was restrained to cryptocurrency. But today, you gave us a walkthrough on what digital assets are, why the case studies, explanations, and so on, and how good that could impact us in the coming future. Thank you, sir, for the wonderful session. Navaratna would not have been successful without the conglomeration of all the 9 branches chairman or the chairpersons. I thank all the chairman and the entire crew of MC throughout Kerala. Today, we had a good participation of more than 250 logins, that too on the 8th day of a 9-day program. I thank all the participants for attending the session. Thank you all. Let us now raise for the national anthem.
जनगणमन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Thank you all. Thank you, sir. Thank you, Venkat, sir.
Thank you for having me here and giving me this opportunity. I really enjoyed this session and meeting all of you.
Thank you, Venkatesh sir. Thank you. Thanks a lot.
Thank you.
Well done. Well done.
Bye.
Very, very
Thank you, sir. Thank you. Thank you very much.
interesting session.
Thank you, sir. Thank you.
Thank you very much.